Good morning. How is everybody? Very well. It's a pleasure to be with you this morning to spend a few minutes to I've got two basically topics to discuss with all of you this morning. One is to discuss the economic environment, since I'm an analyst, investment professional by training. And as I look around the room, I am guessing that some of you are very interested in finance and investments. So we'll talk about that. And my sort of angle on that part of my conversation speech will not be so much short-term, but very long-term oriented. So I hope that you will find that useful. And then the second part, which really goes to the title of my presentation, Vision with Action, is to describe to you the success that we've enjoyed within New York Life and New York Life Investments over the last 5 years since the financial crisis started in 2008. As I, again, look around the room, many of you were but teenagers back in 2008. But I believe you know, since you are now part of arguably the best business school in Korea and one of the best business schools in the world, that you know that what we have experienced over the past 5 years has been absolutely historic in nature. So what I'd like to do is describe our journey at New York Life and New York Life Investments and what we faced back 5-6 years ago and the success we've enjoyed, but importantly, not to basically share that information or even brag about that success, but rather have you learned something about what things that we thought about, what actions that we took to make ourselves to be what we believe was one of the tremendous 5-year periods leading a business. And as was introduced, the three important of my coworkers are here, and they were certainly part of the success that we have enjoyed. So let's begin. I've got a slide presentation, and I know you're all used to the slide presentations to basically discuss both of those topics. And when I gave a presentation here last September, anyone from September presentation here today? Raise your hand. Nobody. Okay. So I could have basically used the same presentation as September, and you would think that this was a very novel presentation. It's actually very different. But when I gave a presentation last September, the best part of that presentation was actually not my presentation per se, but were the wonderful questions that many of your former students or fellow students actually asked in September. So if you please take some notes, and during the course of my talk, put some questions together, and I would be happy to answer any and all of those questions. Okay? Very good. So let me describe to you my perspective on the long-term trends. And long-term trends are extremely important because what you have already, I'm sure, learned from your business school topics and studies is that you have to be very analytical in all aspects. And I believe that long-term fundamental analysis is probably more important to be successful because in the short term, there are so many uncertainties that often I find that economists and investment professionals, when they try to predict short term, it's nothing more than a guess, if you will. So in the U.S., we have casinos primarily in Las Vegas, and if you go to Las Vegas and you basically bet on when you're gambling, it's luck more often than not if you were to win. And I find that short term is very difficult to predict. Long-term trends are not easy to predict, but those trends are very important in making sure that you position your analysis and your strategy towards what you believe are those trends. And more often than not, long-term trends are easier to develop here because they are grounded in some fundamentals that just don't change over the short term. So what I have here is a grouping basically of 3 broad trends that many of you may be familiar with, but what I'd like, it's good to actually see it on one slide. And in the interest of time, I'm actually not going to go through every one of these topics. I know this will be posted on your website, and I believe the video you could, if you're really bored, you could hear it again after my formal presentation. But you might actually want to just remember the basic thematics and this Venn diagram that I've described to you here. And in your studies here at the university and even outside, just make a note of these trends. And if you find an article on the web or you hear another person talking about these trends, you might want to even mentally or actually on your computer or your iPad, just make a note of that so you can actually follow these trends not only for the remainder of your business school career here, but as you go into the work environment as professionals, because I am absolutely convinced that these trends will remain in place for the next 20+ years. So this will be very important for all of you, not only as students in the business school, but as you go into industry and actually work in your various careers, in the various jobs here. One very important thematic would be the whole globalization. Now, you have basically grown up here as a child, as teenagers, and now as young adults in a globalized world. But globalization is actually a relatively new phenomenon that, at least in my professional career, when I was in your situation 33 years ago, that's when I started business school at University of Michigan, we were not globalized here. U.S. was a very insular economy. Europe was very insular. Korea was just getting started. It was still a third world country. China and India were absolutely third world countries. In fact, at that time, actually, Japan was the dominant economy, if you could believe that. It was just actually peaking in the late 70s and early 80s, and really the 80s was a very good decade for Japan, and they've been in a stall situation for the last 25 years. But even there, it was a very insular. They did a lot of exporting from Japan to the United States. But so the whole notion of globalization, which you may think is something that's always been in place here, it is not the case here. This is really a uniquely, I would say, the last generation, the last 25 years or so, where we've actually seen the world globalize, where a company like Samsung could be the largest smartphone manufacturer and have such a dominant share, not only in Korea, but throughout Asia, in Europe, and certainly in the United States. That just did not happen, say, 30 years ago. The second theme here that's very important is innovation. Here again, as you're listening to me, you're probably thinking, well, what is so unique? What's so different about innovation? I can tell you, as I stand here today, as you are sitting there listening to me, that innovation the last 5 years, this is from when you were a teenager to now in your early 20s, I assume. Maybe some of you are still teenagers. You've lived through the last 5 years, which has been the most explosive 5-year period in the history of mankind compared to the prior history, before the 5-year period. And the next 5-year period, if you talk to any expert in high technology, they say that the next 5 years will even surpass the last 5 years, which was the most remarkable 5-year period. that has and will have an unbelievable impact on how business and industry works, how society works, and I'm going to share with you some slides here that will, again, bring home the importance here of innovation, especially around the technology advances here. The third major theme would be in the whole area of demographics. Demographics basically would be defined as what is the mix here of people within a certain country or a region, their ethnic mix, their age mix, and the like. And what we are going through right now is we're right in the middle of a major shift in the demography of the world, where broadly, not entirely, but broadly, the first world countries, the developed world, the G8 economies are aging very, very rapidly, and the emerging economies are moving even faster in terms of the growth in their demographics because they have a much younger population. In the US, for example, and I'm guessing that many of you have not studied Mexico, for example, as an economy, but Mexico is just south of the United States, as you know, on the world map, and that has, on average, about a 20-year difference here between the average population, average age of people in Mexico versus the United States. Over time, in addition to other reasons why, Mexico will grow much faster than the US because the demographics are so young that so many of Mexicans actually are of similar age to you all, and that as they move into their working years, that the Mexican economy will be far more productive on average here than the US economy because of the demographics. And there's some undeniable trends in demography that I hope you will find interesting. So what I'm going to focus in on, again, is not all of these topics, but let me just give you, by way of a slide presentation, to give you my high-level insights, and then perhaps with that, it will pique some of your interest and you could do a little bit more studying on some of the more details of each of these topics. First is the income distribution. What we are living through today in one of the most fast-moving paces, if you will, is an income distribution that is widening faster than we generally experience in certainly the 21st century, and you certainly in the modern age here. I mean, if you went back to other periods in human history, there was always a very wide income distribution, but we've never had the global capitalism as large as it is today. About 2/3 of the world today are controlled by capitalists, if you will, especially if you include India and China as being more capitalistic economies, are controlled by capitalism. And in this era, we've never had the wealth dispersion that we are seeing, and it's actually that wealth dispersion is getting larger and larger, which has very unique sort of business implications and also some very unique social implications. So what this slide illustrates for you is that there's one part good news and the second part is bad news, is that the world is actually becoming more middle class. So perhaps not so much in Korea, because I consider Korea to be a well-developed economy, but if you look at China, India, Philippines, Indonesia, many of these economies that are emerging and becoming more middle class here, more and more of their citizens are actually becoming middle class. And what this is again illustrating is a shifting, if you will, to the very large growing middle class. That has some very positive implications here, especially for all of you, because as I look around the room here, you're mostly Koreans, but there are others I'm guessing that are from other countries studying at Korea University, is that you're actually, in many respects, you're at the epicenter here to take advantage from a business perspective, from an industry perspective, this growing middle class. Because growing middle class generally means, not always, but generally means that there's more consumption going on, and the economies are more vibrant, and various industries, especially in the consumer products area, they spend more money. So this is very, very good broadly from a business perspective. If you look at the top part of the chart, though, is this basically profiles the United States, but you could actually overlay, say, much of Europe, the European Union economies. And here what we're finding is that the wealthiest parts of the world, namely the United States and the European Union zone, is that the growth of the top 1% is growing much faster than it's ever grown in the history of these two regions. And that is one part, a big concern for all of us, because most societies, and certainly capitalistic societies, generally remain strong when there's a strong middle class. And what we're witnessing today is actually that the top 1% is getting far wealthier than the rest of the 99% for that matter. And as you can see, the higher you get towards the top 1%, the top 5%, the top 15%, the growth rate still outpaces the rest of the country. So that's one thematic. That's one part. Good news, the growing middle class. And the second part is bad news, is that the wealth dispersion is being created that's not good from a societal perspective. Second is now to support this whole notion of the growing middle class. This slide may surprise you. Some of you may know this, is you're actually in the epicenter of the growing middle class. When I started in business 30 years ago, after business school, the growth was almost entirely in Europe and in the United States. So I started in the right country 30 years ago. You're actually going to be starting in the right country and certainly the right region here as you graduate from Korea University, because the largest share of the middle class, the largest growth, is actually occurring in the whole broader Asian region. Obviously, the anchors here will be, and by definition, that would include India and China, and that's why you've got such a large, massive population. But that would include Japan, which is actually aging very rapidly, Korea, and then all along into the Asian region here. So that should be very exciting for you. And this trend, by definition, cannot change quickly because these are demographic shifts here. And so this is an area that should be very, very exciting for you. The fact that, again, you're in the region with the largest segment of middle class, and that it is the largest population that's growing the fastest. Emerging economies. You all know that the three primary developed economic regions would be as follows. The U.S. is the largest in terms of GDP, or what I use is something called PPP, which is a purchasing power parity. Basically, that captures the consumption side of the equation. And you can see that U.S. It remains the largest. The Eurozone actually is actually a little bit larger as an economic union. If you look at the European Union, it's about 20% larger than the U.S. GDP in total. And then Japan is, as a single country, the third largest economy after the U.S. and China. So if you actually profile the Eurozone, the U.S., and Japan as three largest countries / regions, and then compare it to the emerging economies, something happened last year where on a purchasing power parity basis, that the emerging economies basically crossed over and became larger than the developed economies, which again is positions all of you in a perfect situation here because you're closer to the emerging economies than certainly Europe is and even the US. So you're sort of right in the middle of that opportunity set here. But this trend is not going to change at all. It's going to continue by that dotted line here where the emerging economies continue to grow and the developed economies, especially with the fast aging that's occurring here in Japan, is the oldest economy in terms of the demographics, followed by Europe and then the United States here. So we're all getting older, which means almost by definition, especially with our immigration policy in the three regions, that we're going to grow slowly, but the emerging economies will continue to grow at a faster rate. That's another trend that's undeniable. Another, and since you're in one of the nicest, I think, cities in the world, there are probably about 20, 25 world cities, and I would consider Seoul to be one of the top 20 world cities, that you can see that more and more people are actually moving into the urban areas, whether that's in China, folks moving to Beijing or Shanghai, in India to Delhi, in Korea to Seoul, even in the US, there's especially amongst the baby boom generation, these are people born between 1946 and 1964. More and more of the baby boom generation in the United States, as they're getting older, are finding being in the city much more attractive than being in the countryside or in suburbia, in suburban locations. And that trend will continue. And so that's another sort of consideration, especially as you think about like what type of business or what type of company that you might want to go into, join after you finish your MBA or your bachelor's degree. Another trend that's very, very important, that's going to be long-lasting, is how many of you have heard of fracking technology, shale oil, shale gas? There are a few of you. This is not something that is an interesting sort of short-term phenomenon that's going to last perhaps 3, 5 years. This is actually going to change the nature of how energy is going to be produced here around the world. Right now, all of you are aware that there are some oil-producing regions that export a lot of oil. For example, Middle East is obviously the largest exporter of oil. Russia is also a major exporter of fossil fuel. Australia is also very large, especially on behalf of the various of the Asian economies. U.S. is a very large producer of energy, both oil, natural gas, and coal. The concept of shale technology, which is basically a high-tech oriented way of fracturing the rock sediments, if you will, deep underneath the ground to extract oil and gas that up to this point, before the fracking technology, that you knew the oil and gas were down there, but there was no easy way to extract that. And that is actually creating potentially an energy boom, not only in the US, but around the world. That's actually very good here for the global economies, especially for an economy like Korea, where you're a net importer of energy, because that's going to keep oil prices, fossil fuel prices, relatively low for a longer period of time. And you can see that this is a chart to illustrate US, and you can see that in 2005, that the United States, we were importing 30% of our total consumption versus what we are producing. So we can only produce 70% of what we are consuming, and that we had to import the remainder. And you can see by 2011, that 30% deficit or gap has shrunk to 19%. And at this trend here, and technology in fracking is only going to get even better over the coming years, not worse. that we're basically, the United States is moving towards energy independence, which means that we don't need to import, within the United States, we don't need to import oil and gas from the Middle East and other parts of the world, and which means that other importers like Korea and parts of Europe and Japan and the like can have access to more supply because the demand will be less so because of the fracking technology. This is a very important major theme that, again, I believe is going to only benefit the world economies, and especially an energy importing country like Korea. Technology. Now, you're probably looking at this slide, and first of all, you're looking at this telephone, and you're wondering, what is that? I've never seen anything like that, but you know, when I was your age, we actually had telephones that looked like that. There was no cell phones, and that phones were basically in the home or in the office, and it was all landlines, if you will. And then take a look at some of the other, what we even consider technology. You don't even consider this. You think that these things are sort of, should be in museums because you've never even used these. Here, you've got radios. I know you have televisions, but probably televisions that never look like that. And then obviously the internet you all have grown up in. And then the iPod. Actually, in many respects, the iPod is quite antiquated, right? Does anybody have an iPod? Few of you, yes. And then who plays Angry Bird? It's okay, Dean Lee is not here, so you can all admit if you play Angry Bird here. The point here is that, 2 points. One is that technology has changed very dramatically, okay? So that's point number one. And new technology is the second point, is getting adopted even faster. 50 million users seems like a lot by historical standards. It took 75 years for the telephone to be adopted by the first 50 million users. The radio, it took 38 years, 13 years for television, and you can see what we're talking about here. New technology gets adopted almost instantaneously today. That is what we're living in. I want to impress upon all of you, because you think that this is not a big deal because this is how you've sort of grown up, yes? But what I'm telling you is that technology is moving so quickly, and it is moving faster in the history of mankind, and even in my history here, because I'm a generation and a half older than you, and I remember actually having a landline telephone like the one you see there. I remember having a very big box here that was extremely deep, not the flat screen that Samsung and LG manufacture, but a big box called a television that had very, very poor resolution here. I grew up with that here. See, you're used to the fast, highest quality technology, but in the historical perspective here, I want all of you to appreciate how quickly technology is moving. And in that regard here, your generation is actually creating the pace of that technology, especially in the thematic here at the bottom that we call SOLOMO, social, local, mobile. You know no better. You know no other, actually. You created Facebook and other social media sites. You were the first adopters to all the mobile technology. You had to teach your parents how to program, right, the smartphone. Your parents still don't only use maybe 10 or 20% of what the smartphone is capable, yes? And they still can't even read the, half of the things that are on the smartphone because their eyesight has gone so bad here. And you are actually in the midst of creating this amazing mechanism for sharing of information, sharing of thoughts that I want you to appreciate. There's a reason why coming out of Silicon Valley today, in the greater Palo Alto area. And I hope that some of you go into high technology. There are so many millionaires and billionaires that are being created because never in the history of mankind have these sorts of numbers been adopted so quickly. 200 million hours of video watched on YouTube in one day. 81 billion likes on Facebook just last month. And this is probably about a year old, so these numbers are understating, I'm sure. Average teenager texts almost 5,000 texts last month, and then Twitter has become basically a mechanism for, it seems like, everybody to basically broadcast their thoughts here. This is not something that existed 5 years ago. These companies either were not around or just getting started, and now it's the norm. And the advantage that you have versus me or even somebody in the 30s is you grew up. You actually made these companies. And so in business, I would say you should take advantage of it because you have something called a competitive advantage. I want to end this section here before I go and talk about New York Life to basically illustrate for you and to you the fact that on the one hand, the world is just a wonderful place to be with all the technology and advances. Every time I come to Korea, especially having been born here and immigrated 47 years ago to the United States, I'm always so impressed how developed and how modernized Korea has gotten. But we also need to recognize that despite the wonderful things that we enjoy in Korea, in the United States, and most parts of the world, that there are a lot of risks that are in the world today. And you can see that one of the major risks here is that we have the Eurozone that almost broke apart, that is recovering, and that we need to be very mindful of the fact that it's still, again, the largest economic region in the world, and that's in the light blue shade. The whole Middle East, North Africa region, we call the MENA region, M-E-N-A, is an area that has so much resources, especially from oil, but has so much experiences, such instability. Ms. Hung, who was introduced at the beginning of the session, and I, 2 weeks ago, we spent some time in the Middle East, in the United Arab Emirates, in Dubai, and Abu Dhabi, and Qatar, and they have so much money, but they're so close to the fragile situation in Iraq, in Iran, and in Syria. And so we need to be always mindful of the risks there. Japan is in a major downturn, and they're trying to stimulate the economy under the new leadership of Prime Minister Abe, and they call that Abenomics. I actually thought this time last year, or actually in September when I spoke to many of your fellow students, that he could actually turn this around. Now I'm having second thoughts of whether Japan could actually get its act together and stimulate the economy and create some economic growth from the economic doldrums over the last 25 years. The jury is still out there. And then if you look at the pale yellow section, these would be the major of the emerging economies. And there again, I would say that there was some concerns as a result of Federal Reserve Fed tapering in the United States, basically the tightening of monetary policy in the U.S. There was a lot of concern in May. And now, actually, I believe that the emerging economies have bottomed in total, not entirely, but in total, on average they bottomed, and there's probably more growth potential in the emerging economies than downside risk. So that's my sort of quick trip around the world to describe to you the geopolitical landscape here. Now let me pivot over to talk to you about New York Life, and I'm giving you an example or a story of New York Life, but I was asked by Dean Lee and others here to help you by way of our experience, maybe share some of our success, but again, not to brag, but maybe to teach you some insights here of how you might take some of those successes and apply it in your career, in your various jobs that you will be going into. Okay? So, the title actually came from the great Nelson Mandela, and you can write this down, but just Google him afterwards. I love this quote because it really talks about whether you're a world leader like Nelson Mandela, a freedom fighter, or a political leader, or a business leader, that this statement holds for all of us. And quote, "Action without vision is only passing time." Just thinking. There are a lot of people who actually are very visionary, but if you're not action-oriented, you're just not going to be successful. Vision without action is merely daydreaming. That is basically, actually I said it the wrong way. I meant to say vision. If you have good vision, but if you can't act, then you're just daydreaming. Without action, without vision, it basically suggests that you don't have the right direction in terms of what your action is going to produce here. But vision, as Nelson Mandela suggested, with action can change the world. Vision with action can change the world. Vision with action can change a country, it can change a university, and it can change a corporation, it can change a business, and it could actually change your career, if you will, from being an average career to an outstanding career. You need, as you go out into the workforce, you need to have both an action-oriented type of a profile, but also be very visionary in what you want to accomplish. This is New York Life. This is probably not a company that you're familiar with, but I want to illustrate a couple of things here. As was noted in the introduction, one is that we're a very large financial institution. In fact, we just made another acquisition in Europe that put our asset at over $500 billion. And for a financial institution, assets under management would be an important metric, if you will, of how successful you are. At over $500 billion, that would put us in the top 20, 25 worldwide in terms of total assets under management. In fact, there's actually no institution in Korea that I'm aware of that's actually larger. Even NPS is not that large in size, and as strong as Samsung, all the total assets would not come close to the 500 billion. So that's one statement about New York Life. The second is that at the top you see the credit rating, and New York Life enjoys the highest credit rating around the world by the major rating agencies. And if you're interested in going into a job, a profession in finance, say for a bank or an insurance company or an asset manager, the credit rating is extremely important. And so the two sort of points that I would like to make here on this slide is that New York Life is not only large, but it's very, very strong in terms of the financial strength. So my boss, Ms. Hung's boss, the chairman of New York Life, about a little over 5 years ago, to even Nelson Mandela's quote, put together, with some advice from many of us here, but ultimately it was his decision here, to create the right vision and strategy. And I want you to make that note to yourself here. Having good vision is extremely important. It was very simple, too. We're a very large company doing business in many areas within the U.S. and around the world, but we only had 3 tenets that we wanted to adhere to in terms of our vision and strategy 5.5 years ago. One is that despite the fact that it was a mature industry, we actually wanted to grow even faster in the U.S. life insurance marketplace. So that's what we mean by, quote, doubling down in U.S. life insurance. That's a mature industry. And so it is not necessary for you to be in a business that's always growing fast. Even if a business is not growing, if you're the best, you can still be very successful. So that's point number 1 on the vision and strategy. Second is that we actually had an insurance company in Korea. We had a lot of of businesses, insurance business in other parts of Asia, but we determined that it was too difficult to compete against the Samsungs and the Kyobo life insurance of the world in Korea. So instead of doubling down, we basically exited Korea, Hong Kong, China, Thailand, India, Taiwan. And so the lesson here is that just because a market is strong and growing does not mean that you can be successful. Sometimes it's better to pull out of a market if you do not believe that you can be successful, and that's what we did. And third, last but not least, where Ms. Hung and I have operated over the last 5 years is that we decided to significantly grow our investment and retirement business, the asset management business, the money management business. This would be, again, we have a partnership with Samsung right now, so this would be not so much the life insurance portion, but the Samsung asset management and Samsung Securities, for example. Those are the types of businesses that we, especially in the U.S., decided to grow from very, very nominal levels. And what we have achieved over the last 5 years is something that has been significant. Never in the history of this company have our earnings actually grown this rapidly. It was a very strong company in 2009. This was the low point here after the financial crisis of 2008, where we actually earned, many companies actually lost money. Many companies actually went bankrupt. Lehman Brothers, Washington Mutual, and the like. But we actually not only made money, we actually made good money at 1.1 billion US dollars. And you can see that over the subsequent 5-year period, we have grown those earnings steadily over the 5-year period to where we enjoyed record earnings in 2013 of 1.8 billion US dollars here. Now, within the asset management space, though, the market has actually done extremely well. So that's what we call beta risk here. For those of you who have studied investments and capital markets, beta would be the risk of the market, whether it's the bond market or the stock market. And so if you were generally just in the market, our assets that ended 2008 at 243 billion, that's on the right chart. If you were just been market average, that would have grown to 415 billion. And you can see that the actual growth of the investment businesses of New York Life have grown over 100 billion, even more than that. So that's been significant outperformance. CAGR is something called compounded annualized growth rate. For the industry was approximately 11%, and we enjoyed over 16% annual percentage growth, which by almost any measure has been a significant growth rate for the company, especially in the industries that we participate in. Another fact that was extremely important is that assets are important, beating the market is important, but when you go into business, businesses are generally there for one thing, right? You want to make money. And you can see that the investment business here of New York Life in 2009 almost made no money, meaning that it broke even. It was close to zero profits. And you can see that over the subsequent period here that we've seen dramatic growth. In 2013, we made US dollars here about $160 million, and we expect that that will continue to grow. And the next slide will illustrate how we're going to get to that growth rate. Making money in a business, for-profit business, is extremely important. But what's also impressive that you should note here is that the consistency of the growth rate that we've enjoyed over the last 5 years. And we expect that trend will continue. So we've had a wonderful 5-year period. Most of it, not entirely, but most of it has been on the heels of very strong success in the United States. Now, we do have a lot of foreign activities, But again, the good majority came from, especially the profits, came from the U.S. So you'll ask the question, well, what should we do for the next 5 years? And similar to now, this is the connection between the New York Life strategy and the mega trends that I described to you is that Ms. Hung and I and others who have put together this strategy, we've determined that in the next 5 years and perhaps the next 10 years, the real growth is not going to be coming from just being successful in the United States, but really creating a global footprint. And you can see by way of sort of a geographic presentation here that the U.S. is an area that is important to us because that is our home country, if you will. But with the recent acquisition, Europe, which is the second largest pool of assets, is an important area for growth that we intend to penetrate even more so than we have. In conjunction with that acquisition, we also were fortunate enough to purchase an asset manager in Australia, which actually, by geography, it looks so large, but you know, the GDP of Australia and the population is relatively small, but is a very outstanding area, especially for asset management, given the nature of how savings and investments occur in Australia, because they've got some mandatory retirement savings rules, if you will, down there. So we're very excited about that. And then last but not least, and I'm sorry that the rest of the world is decolored here, so it might be a little bit difficult to see, is that our Asian operations, if you will, our aspirations to grow in Asia is really centered out of Korea through a joint venture relationship with the Samsung Financial Group, the life insurance company, the asset management company, and the securities business. And remember the slide that I described to you where half the world is basically in that circle there? We actually believe that the fastest growing opportunity in your career in the next 30 years will come from the greater Asia Pacific region. And so if you're interested in finance and investments, you're actually right at the location here for the best growth that I can imagine here. Again, I hope you're very optimistic as a result of that. Again, when I was in your situation 33 years ago in business school at University of Michigan, I did not know about the world at all. In fact, as I mentioned, we were not very globalized, so I had no choice other than to be in the United States. I was very fortunate in the subsequent 30-year period that the U.S. markets grew faster than virtually every other market. And what you have to look forward to is the same growth phenomenal opportunity coming out of Korea and the rest of Asia. That should be tremendously exciting. And for the New York Life strategy, we intend as an institution to take advantage of the explosive growth in the Asia Pacific region that you are actually going to be living through in your career, in your professional lifetime here. So my concluding thoughts here would be as follows, and these are some advice that I hope, again, the slides and some of my comments here brought home, if you will, would be, one is that even as a student, even as you start in your career, you have to be aspirational. Think large. If you think small, you will almost always achieve being small. Think large, be bold. Second is you really have to, especially think about the New York Life strategy, focus in on your strength. So many of us tend to focus in on trying to improve our weakness. We all have weaknesses, yes? It's actually better to really think about what you're really good at. And Dean Lee and I had breakfast this morning, and he told me that you are the finest students here in Korea. In fact, he said that he could not have gotten into Korea University if he were a student today because he was not that smart. And I'm not either. So today I would not have gotten into Korea. So you're very, very intelligent here. And so you have a lot of strength as opposed to focusing on your weaknesses, I would suggest that you focus in on your strength. You have to grow, but you have to grow intelligently. You should not grow just for the sake of growing, but you should grow intelligently, and especially whether it's for personal, professional reasons or for corporate reasons. And then last but not least, if there's one quote that I would ask you that you commit to memory and actually think about in the balance of your career university life and as you go into business, is you really have to focus in on action and execution. That being action-oriented is the one denominator of success in any business career, any career that you would aspire to. With that, I sincerely appreciate all of your times. And do we have some time for a few questions? Yes? Okay. So I'd be happy to take any questions about the economic environment or New York life in particular.
So if you have any questions,
Yes.
please raise your hand.
Thank you. And I once was told that insurance is the very heart of the capitalist economy, and that depicts that the capitalist economy is full of risks. And as the head of the giant insurance company, do you agree with this thought?
You're asserting that insurance is the heart of capitalistic economy?
Yes, I once was told like that, and do you agree with that? I mean,
No, not entirely. I appreciate that statement. I wish it was. So maybe I should broaden it out. I think that finance actually in capital sort of markets would be the heart of the capitalistic economy, and insurance is an important part of it. And so I would, if you think about finance, and that's banking, both commercial banking, investment banking, insurance, other sort of finance companies, the organized capital markets, whether it's stock markets and bond markets, and the free, efficient flow of money and capital that greases the economic wheel, if you will, would be the center of capitalism. But insurance would be one part of that. And so, but insurance is an important part of that. The other obviously important, I think by your question, if I understand that properly, is that insurance probably takes a lot of risk. So it's a risk management tool. And the pooling of those risks, long-term risk, is a very important function for capitalism. So I would agree with you on that. And one of the reasons why we're so very excited with our strategic partnership with Samsung, because we're actually able to share our capabilities between Korea and the U.S. for the betterment of U.S. opportunities and Korean opportunities. Okay.
Thank you.
I think there was a young lady asking a question right there. Right. Oh, we'll start with that. Okay.
Thank you, Mr. John Kim, for joining us here. And I have a question about the Federal Reserve quantitative easing tapering. And because I'm interested in finance, and I would like to know your opinion on how this tapering by the FRB will affect the Korean economy specifically.
Yes, that's a very good question. I could spend 30 minutes answering that question. I'll try to give you a sort of a high-level perspective. What the Federal Reserve has done to revive the U.S. economy over the last 5 years is something that they've never done in the history of that institution. And I would say that without the actions of the Federal Reserve, starting with all the great work under Chairman Ben Bernanke, where he has he basically took the Fed funds rate down to zero right after the financial crisis, and then he engaged in the quantitative easing activity 1, 2, and 3. Had we not done that as a Federal Reserve, I'm fully convinced that the U.S. economy would still be in a recession. So the work has been terrific. But as a result, the Federal Reserve balance sheet now has grown to a level that we have never experienced. In fact, shortly it will be over $4 trillion here. Okay? And in the history of the Federal Reserve in the U.S., the average balance sheet has been somewhere between 500 billion to maybe 750 billion. So this is 6, 7, 8 times more than we've ever had. And so as a result, what you ask is the tapering has to have occurred, okay, begin at some point. And I think the good news is that the expectation of the tapering actually hit the market in May and June of last year very hard. And as a result, the emerging economies actually suffered dramatically, and Korea suffered a bit too. But after that, the shock wore off, and when the actual tapering began in December, the news was taken actually much better, meaning the reaction was much less negative. And so my expectation is that the tapering in and of itself, which will likely continue, and I hope we actually finish with the tapering this year such that the Fed will not be buying any bonds at this point, because at $4 trillion, it's too large of a balance sheet, that it will have less of an impact on the world economies. And as a result, I do not expect that the Korean markets and economy will suffer as much. So I'm cautiously optimistic. Okay?
Thank you.
Okay. Over there. Yes. I just remember her being the first hand that went up, so that's why I wanted to give her there.
I have a question about the Asian economy. The developing economies like China or India, when would they able to overcome the U.S. economy? Because it's taking quite a long time, because China has developed for a long time, but it's taking a while to become a developed country. So
Yes.
I'm just curious, how long would it take to overcome the U.S.?
So if I don't keep tabs on the GDP every quarter, but the U.S. GDP right now, this is in dollar terms, is approximately $17 trillion. And the Chinese GDP is around 7, I believe, 6 or 7. So it's still only about 40% of the U.S. economy. So, and then Japan is around $5.5 trillion. These are all in dollar terms here. So U.S. will remain the most dominant economy for quite a long time, I would say. Probably, if I had to guess, based on the current sort of GDP growth rate, if you assume that the U.S. will likely grow, if in the best case scenario, not more than 3% per year, and China really needs to grow at around 7-8% per year, that it would take about 15 years before, say 15 to 20 years before it overtook U.S. in terms of the largest, being the largest economy. China has a larger problem, though. One is that they've got a growing middle class that right now they're not spending as much. The consumption side within the Chinese economy is not as strong as the leaders want it to be, number one. Two is that they've got a demographics that's very odd, because they had a one-child policy about 30 years ago, 25, 30 years ago, and that's actually causing the demographics, the demography in China to be very odd, if you will. So they're going to start flattening out in the next 20, 25 years. And so long term, I think China has some issues that other countries in Asia do not have to worry about. Korea has its own problems here demographically. You know that the big bubble in Korea is the post-Korean War, right? So many of your parents, or maybe a little bit older, now I'm dating myself here, who were born from 53 to say 63, that's a much larger population in Korea proportionally than the baby boom generation in the U.S. here. So Korea has its own demographic issues, but the specific answer to your question is that it will take 15 years, my best guess here, at least here, before China overtakes here. The other thing that's very important about world economies and size and the like is that, the world currency today is still the dollar, yes? So oil is denominated in US dollars, and it's the reserve currency of all the major central banks. And I don't think that China, even if it became the largest economy, that does not necessarily mean that the yuan, the Chinese yuan, will be the reserve currency of the world, because reserve currency means not only are you the largest, but you're the most stable currency. And I think China needs to reform itself and become larger before it's even considered to be the world currency. Okay. Yes, there, and then we'll go there. Right there. Right there.
Well, during the presentation, you kept saying that we are lucky to live in Korea because Korea has so much potential for development in the future, right?
Yes.
Well, personally, I don't know about other countries like Vietnam or Thailand. Personally, I think Korea's development kind of reached recession now because it's like Japan. That's my personal opinion. And if you think that Korea's development will continue dramatically in the future, can you please convince me? Can you please present the reasons that Korea's economy will keep growing? I kind of think Korea's economy now has reached recession, and it kind of needs some other strategy to keep growing. That's my personal.
So you're a little pessimistic, aren't you?
Yeah.
Yes. So I gave you sort of the macro trends, and I actually, I know the employment situation in Korea is not easy, but that's the case here for many 18 to 25-year-olds around the world. The recovery in the global economy has been good, but it's actually been at the cost of especially kids or students in college who are coming out and looking for jobs. So there's an old adage here in the U.S. that it might resonate with you, and maybe even part of your the question and maybe your pessimism is that they say that when your neighbor is out of a job or does not have work, it's a recession. When you don't have work or a job, it's a depression in the economic scenario. And so what I would say there is that recessions come and go, and so right now the Korean economy probably is not growing as much as it can be or its potential. But the comments and the optimism that I'm sharing with you is more long-term trend oriented. And what I like about Korea is there are a few things. First of all, you're a developed status. It's a very wealthy economy. You've got a fairly well-formed, it needs to get better, but a fairly well-formed financial markets. You have a lot of assets. You are one of the most educated countries in the world. Yes, the per capita PhDs in Korea is second to none. You're the most connected, wired economy in the world. And so you've got all the reasons why you should be successful in the long term. Perhaps what you're maybe a bit more pessimistic about is just the near-term prospects. But again, I think long term, you're in the right region and you have all the intellectual capabilities to be quite successful.
So we'll have the last question due to time limit.
Yes.
While explaining your three tenets, at your first tenet you said, although the life insurance industry was really mature, you could break through with vision. Do you have any strategies to suggest while entering a new market that is already mature?
Yeah, that's a wonderful, very insightful question, actually. I think that mature markets, there are many things that I would advise, but the two things that come to mind would be that in mature markets, because you don't have the natural growth of that particular industry or markets to help you because it's not naturally growing, so by definition you're flat, you really have to pick a sub-market or a strategy that you think you could be very good at, be successful at. So having a strategy that is achievable, that you could be successful at. So that would be one. So really being crisp and very narrowly focused in on what you think you could do well in. The second is that in mature industry and mature markets, you really have to, because by definition they're mature, it means that profit margins are lower. So you really have to focus in on strong top and bottom line growth, meaning that you have to try to grow the markets, but you also have to focus on expenses. So you have to be really good at accounting for your expenses, where in U.S. parlance, the nickels and the dimes and the pennies make all the difference in the world. So you need to have a great strategy that's crisp, but also you need to manage your expenses very, very tightly. So those would be two things that come to mind here about being successful in mature markets. With that, my time is up.
Yeah, it's.
Thank you very much here, and I hope you enjoy the rest of the day.